Assalamualaikum and hello everyone. Welcome to A-Level Accounting. Today me and my friends are going to talk about one of the book prime entry called cash book. What is cash book? Cash book is a book in which receipts and payments of money are recorded. Or we can say a book that combines cash account and bank account. The format for cash book is divided two sides, debit side and credit side of the T account. Debit side means that when the business received money, while credit side means that when the business made payments. In the T account, we label the date of the transaction, the detail, the cash column, and the bank column on the two sides of the account. Next, how do you prepare and record all the transactions in the cash book?
This is an example of question regarding the entries of a cash book. The question instructs us to enter the following transactions in Lee's cash book. On April 1st, there are cash sales of $1,000. On the 2nd, he paid his electricity in cash of $100. Then on the 3rd April, he got cash sales of $800. On the 4th, he banked in cash of $1,400. On 5th, he paid stationery in cash of $20. On the 6th, he withdrew $900 from the bank for the cash float. Then finally, on the 7th of April, he made purchases in cash of $600. So how are we gonna put these entries into a cash book? Let us see on each side of the cash book. On the debit side, the receipts, the first transaction was, on April 1st, sales, cash of $1,000. Cash sales were made, resulting in an increase in cash on hand. This is recorded as a debit entry in the cash column. Second, on April 3rd, sales, cash of $800. Another cash sale took place, adding $800 to the cash balance. This is also recorded as a debit entry under cash. Third, on April 4th, cash C, bank of $1,400. A transfer was made from cash to the bank. Since the bank account is increasing, it is debited under the bank column. Fourth, on April 6th, bank C, cash of $900. Money was withdrawn from the bank into cash. The cash balance increases, so $900 is debited to the cash column. On the credit side, the payments. First, on April 2nd, electricity, cash of $100. Payment for electricity was made in cash, reducing the cash balance. This is recorded as a credit entry in the cash column. Second, on April 4th, bank C, cash of $1,400. A transfer was made from cash to the bank. Since the cash account decreases, it is credited under the cash column. Third, on April 5th, stationery, cash of $20. Payment for stationery was made in cash. This reduces the cash balance, so it is credited under the cash column. Fourth, on April 6th, cash C, bank of $900. Money was withdrawn from the bank into cash. The bank balance decreases, so it is credited in the bank column. Fifth, on April 7th, purchases, cash of $600. Purchases were made in cash, decreasing the cash balance. This is recorded as a credit entry in the cash column. The cash book records both cash and bank transactions in detail, showing inflows, debits, and outflows, credits.
Since we have already learned the basics, let's try something different. So Robin is the owner of a wholesale business. He offers his credit customers at 2% cash discount for prompt payment of amount due, and Robin's suppliers also offer a cash discount of 5% per prompt payment. On 1st May 2014, Robin's cash book showed balances as follows: cash $1,350 and bank $7,480. The balances refers to the starting amount of the account. The balances will have to be put on the left side of the cash book. cash under the cash column and bank under the bank column as shown on the account. For the first transaction on 3rd May, an amount of $2,600 was settled to Campbell Traders with a 5% cash discount. Money was taken to pay the suppliers. This transaction will be recorded on the right side of the cash book. Since there was a 5% cash discount, you'll have to take the $2,600 times by the 5% cash discount, which equals to $130. After that, you have to take the $2,600 and minus the cash discount, $130, which will equals to $2,470. For the second transaction on May 5th, Robin received a check from Kay Scott, who owed $1,600 and was settled with a 2% cash discount. Robin is receiving money, so the transaction will be recorded on the left side of the cash book. To find the discount allowed, take $1,600 times 2%, which will equal to $32. Then take $1,600 and minus the $32, which will equal to $1,568, recorded under the bank column as he received a check. For the next transaction on May 9th, cash sales total to $4,540. This will be recorded on the left side of the cash book under sales on the cash column as shown. Then, on May 16, a payment to Trade Payable LT Wright. The amount owed was $4,480, settled with a less 5% discount. This will be recorded on the right side of the cash book as money is being deducted. It will be under LT Wright. Discount received is $224 by taking $4,480 times 5%, then take $4,480 minus the discount received, which will become $4,256.
On May 21st, Robin paid cash of $4,200 into the bank. Money is going into the bank, so therefore it will be recorded on the left side of the cash book titled Cash under the bank column and on the right side titled Bank under the cash column.
For May 28th, Robin received a check from PTES of $900 and settled with a 2% cash discount. This will be recorded on the left side of the cash book titled PTES. $900 times 2% equals to $18, which will be recorded under the discount allowed column, and $882 under the bank column. Lastly, on 29th May, Robin paid rent of $350 by check, which will be recorded on the right side of the cash book titled Rent and recorded under the bank column.
Thank you for watching, and we hope you guys learned something today. Bye!